good, everybody? Welcome to the Closing Beat. Happy Thursday. How's it going today? This is our quick stock market update show. I got a lot to cover today, so I don't want to take too much of your time. If you're one of our customers, tonight we've got our it's a support class tonight where we're going to cover the performance section of your charts. Some of the common questions I get there. Really short. Always keep those classes short. We get right to the point. And then if you have any questions about individual stocks or you want to sort of look at the markets, I'm happy to stick around as long as you guys have questions. So that's tonight. You already have the email in your inbox. If you can't make it, it'll also be in the dojo when you're ready to go. Now, the dojo got an upgrade. This is where you go to watch your the video replays. These are video classes that we have for customers only, and it just has everything that we've ever done. All these private classes that are some geeky and some more advanced, that's in there. But now when you log in for the first time, you're actually going to be able to check in on the markets just like I do. Put together the whole page here so you can look at the Dow, see how things have gone. You can look at the Nasdaq, go through the watch list, the sectors like I do. You're able to actually participate, go into the dojo, check it out. I have a feeling you're going to like it. Let us know, by the way, what you think. And so all of our archive classes will be on there as well. Anyways, if you're not one of our customers and you just want to know about the markets today, let's take a look. Off to your right-hand side of the screen, you can see a whole lot of nothing. Thanks. Have a good night. That's pretty much what happened today. A whole lot of nothing. I've got a lot to cover because when the markets are quiet, my brain starts running and I go, what sort of geeky things can I look up? I'm going to share those with you here today. A couple things first. You got the Dow higher by 7. That was right at the end of the day. S&P down by 2. That was also right at the end of the day. And the Nasdaq down by 12. Also, right at the end of the day, just a little last-minute trading pushed it into the negative. Overnight, we talked about this yesterday. China's retail sales and industrial output were going to come out today. Industrial output came in less than expected. It was worse, the worst number since 2009, so showing a weakening economy or continuing weakening economy over there. And so they tried to blame it on the Chinese New Year, which actually started on the 15th of February this year. I believe it was the 15th or the 9th, somewhere right in there. It goes by the traditional Chinese calendar. So they tried to blame it on that. Nobody fell for it. Retail sales were lower, only 8.2% growth, which is the lowest since 2012. Where's everybody putting their money in China? So the good news, what helped keep the Chinese markets from falling, and thus our markets from falling today, was that Chinese are putting their money into property. 11.6% increase there in property. That's the strongest uptick since 2014. Now, the trade news, that's in the news today. Trump and Xi going to get together to hash out this deal. Here's the sticking point. They were supposed to meet down here in Florida at the end of March because Trump wanted to finalize the deal in person. President Xi is saying, we'll wait till April and let's finish out the deal, then meet and make a big deal out of the announcement. Bottom line is it looks like it's being pushed into April at the moment, and so we'll see what happens there. Now, as far as the stock markets go, here's the S&P 500. Couple things I want to point out. Last week in our customers class, we covered the breadth. I did a really extremely geeky class for customers as a market overview, and we covered breadth, and I showed when there's such a strong uptick in the breadth like we've seen in the S&P 500, I actually showed exactly what happens next over the next week, the next 2 weeks, months, 6 months, and so on, so you know what to expect. Well, guess what? The Dow, we covered the S&P 500 last week. The Dow actually, the breadth in the Dow, advanced decline line if you're a technical trader, just hit new highs. So the same expectations from the S&P now apply to the Dow. They're actually a little bit better as far as the data goes. If you want to check it out, go into the dojo and check it out. But now our customers know exactly what to expect. And even with the weakness in Boeing in the Dow lately, the overall breadth still has been increasing, getting stronger and stronger. It's a good sign. Basically, if you don't know what on earth I'm talking about, it's a very, very good sign overall. Doesn't mean the markets can't pull back, but overall, very good sign in general there. All right, so that's that one. Now, here in the States, new home sales. So you had new home sales fall to 607,000. I didn't write it down. I think it was 607,000. Bottom line, I know we were expecting 623,000, which was already a reduction. So we were at 638 or something, which was already a disappointment the last go around. We were expecting even less, but we came in lower than that. So that's not a good sign overall. In China, by the way, almost every analyst thinks that this is about the bottom. in their economy, meaning their economy's pulled back. They think it's just about the bottom. Now, granted, they're biased, they're from China, but you get what I'm saying there. If you're bullish on the overall situation in China, seems like many people are thinking this is the bottom, at least from what I caught over there, the global analysts, by the way. Okay. We're going to cover the sectors here in just a second. Tech is your best performing sector. Let me knock out a few things on the charts. So first of all, financials and semiconductors. Markets could not get anything done today. Financials up a little bit. Semiconductors down a little bit. It's very hard to get the markets to do anything significant one way or the other when those two are playing tug of war. We go over it a lot. You need the banks, you need the semiconductors to get anything done in the markets. Today, purely a tug of war, so sort of explains a little bit of the sideways action. Retail sales, if you're a technical trader, that breakout didn't work. I drew a line here to show you. You had a breakout, a very simple and normal pullback, but now we've pulled back underneath the breakout. Technical traders are now like, what? Do I go long? Do I go short? What do I do? If you break underneath the 50-day moving average, that's going to spell negativity for the retails. Let's do bigger picture here. Utilities, currently an overbought sector. If you have investments in the utility space and you notice that they've done really well, like real estate investment trusts and stuff, great. However, they are now currently overbought. Not by my opinion, but if you look at a 10-day advanced decline line, overbought. If you look at the stock, the chart that you can see on the screen here, overbought here in the short term. Also, there's something called, I don't mean to downplay it, just in case you've never heard of it, trailing 12 months price to earnings ratio, and we cover it relative to the S&P 500. Just think of it this way. Are utilities more expensive than the S&P 500 from a fundamental perspective? Am I investing in something more expensive than what I could just invest in over here? The answer is yes. The utilities are currently trading at a 19.72 trailing 12-month PE ratio, which is 1.2 points higher than the S&P 500. Really simple is just saying, yep, utilities are currently more expensive than just buying the S&P 500 at this moment. What's more important than that is when utilities get to the upper 19s in a PE, looking at the trailing PE, they don't stay there very long. Always leads to a pullback. Not my opinion. That is pure data, pure stats there. Don't worry if it's something that's maybe a little more geeky than you like. This is what I do when the markets are quiet. I'm sorry. If you hate it, let me know. If you love it, I'll just try to keep it in mind that you like this sort of stuff. Okay, best sector. So far this year, your best sector is tech. You got tech higher by 16.4%. It almost got to new highs today. Didn't quite do it today. Industrials are your second best performer so far for the year. So if you're just hunting for ideas, whether to be long or short, tech is your best performing sector. Industrials, second best performing. I show 15.4% there. And energy, third with 14.5%. All very close. So really good performers there. On the downside, you got consumer staples. Consumer staples still positive by 8.2%, but lagging behind there. And then you have healthcare. That one just can't seem to get anything going. Only 5.9% since the beginning of the year. Was last year's relative strength category of the market. This year it leads the way for relative weakness. Do you care about any of that? Did that just put you to sleep? If so, wake up. All right, let's look at stocks. Some of you guys like to look at stocks. Boeing still lower on the day. This is a $30 billion pullback for them. Look, all the planes are basically grounded all across the world. It pretty much covers everybody. I think you had Cambodia and Colombia overnight, or one or the other or something. They grounded all their planes. Analyst from Bank of America says 3 to 6 months that this is going to be in place. So remember yesterday we said, hey, this isn't an overnight fix. You don't want it to be an overnight fix. 3 to 6 months is what Bank of America's transportation analyst is saying. So we'll see. General Electric, the company reported today, good news, bad news, right? If you follow along, the stock was higher by about 3% because overall most people thought it was good news. The company said we expect to earn 50 to 60 cents per share. If you don't know what that means, basically we expected them to earn 70 cents. So that's the bad news. We thought they were going to make 70. They say, hey, we're going to make probably 50 to 60 cents per share. 50 cents of earnings for every share that's out there. But the CEO did come out and he said, look, 2019 is basically trash. We're rebuilding. We're going to cut every ounce of fat we can. We're going to restructure and sell off anything that we can. We really expect 2020 and 21 to be much better. And traders love that one. Investors love that one. So you had the stock higher today overall. Sorry if I just messed that up. Image-wise. All right, Dollar General, that's one of your bigger losers on the day. I actually think it was the worst performing retail stock in the category. Earnings missed expectations. Revenue was actually a little bit better than expected. Store sales were a little bit higher. As that sort of got digested throughout the day, you can see here on the charts, sold off aggressively on the open and then started to recover a little bit along the way. So not bad. I mean, it's bad if you own it, but it's not as bad as it could have been. Snapchat. We haven't talked about this one in a while. The company's name is actually just Snap. And so this one broke out to highs here today. 12% rally. You know why? There's an analyst at BTIG. Tough analyst. He hated Snap. Hated the stock. Was constantly bearish. Nothing good to say. And basically flipped he just completely, whoop, now I'm bullish. So he's very bullish on the stock. He thinks that there's another 50% rally in the mix here for this one. So if you like trying to pick some of these things, we'll see what happens. Uber, it's not really something I can show at the moment, but Uber is going to start the IPO process in April. The whole road show, getting everybody excited about it. So it'll be Lyft and looks like Uber right behind them. It may even be somewhat close together because we'll see the timing of it. Facebook, man, they got a lot going on. They had some outages yesterday and the day before. Instagram, WhatsApp, outages. There are criminal investigations for how they're handling the data, something new out there. And also, like just as the market closed, Chief Product Officer and the WhatsApp VP all they're resigning. They announced they're resigning after the close there. So the stock had a bit of a rough day, holding back some of the big tech that was pretty strong throughout the first part of the week. All right, chart of the week. Do you like looking at technical charts? Here you go. I'm just going to leave my cursor here. You can see the line. You got a potential big long-term breakout here on General Mills. Most boring name you could have a breakout on, but technical traders are going to love this. Every scan, every technical scan I have is hinting at this. Well, just bringing it to people's attention. So General Mills there, they were upgraded today. That helped them get to the top of this little breakout area there. Remember, they own Blue Buffalo as well, which is not really a food. It's more of a dog food. But the analyst says that their business overall stabilizing after buying Blue Buffalo. They're starting to get their bearings back in order there. And I don't know if you like that sort of thing. GIS is the symbol. Apple upgraded today, 220 price target. Just FYI, 220 is way up here. So analysts at Cowen thinks 220 is going to get you there because of services. Everybody's interested in services. Johnson & Johnson lost case today. $29 million award by a California jury paid a lady, a cancer victim, I believe. And that was just one case. They have 13,000 more cases in the works. So just to give you an idea there, you got to treat your people right. You get sued. Tesla, Model Y SUV, I think they introduced it today. You could probably look it up now. Production's supposed to start in 2020. We've heard things like this before, but this one looks like they're really going for it. Also Delta, Berkshire Hathaway, Warren Buffett's company. This just shows you how slow of a news day it was, by the way. The news headline was, Berkshire Hathaway increases its stake in Delta Airlines. Total holdings now just under 71 million shares. That's a pretty good headline, right? You think, oh, old Grandpa Buffett over here is buying Delta Airlines, 71 million shares. Maybe I should dive in. Here's the thing. They added today, the purchase that was reported overnight was a total of 6,500 shares. Tiny, tiny little thing. They got 71 million shares. A rounding error, right, is what 6,500 shares is. So just careful on the headlines. I try to point those things out to you. I don't like to bash people, but just careful. When you read a headline and you think you're going to respond to something, look a little bit deeper just to be safe there. All right, if you have any questions, I'll be happy to answer them, but I officially covered everything I want to cover. The software, apparently, they already have the software works. They've been working on it already. A little bit more of a fire under their you-know-what to get it done now. So many people on like the other analysts besides the Bank of America person were ahead of the 3 months, by the way. So even though the guy from Bank of America, a highly respected transportation analyst, he said 3 to 6 months, 6 weeks was most people's response time that study it. They know more than I do. I don't know how long it'll take. I just don't think it should take a week. Like if we have an answer next week, wouldn't you kind of be a little nervous? Like, I brought this up yesterday. Take some time. Go ahead and test it out. Do some takeoffs and stuff. Let's see the performance. Anyways. Ashish, how much trust do you put in these analyst recommendations? Any particular company you find trustworthy? I rank them all, actually. So if there is one that is more successful than another or has a better overall batting average, just simply success rate, it's a little tough to track because they're giving you a 12-month, sometimes 18-month view of what they think the stock will do. So you're kind of measuring the progress as you go. But I not only track their accuracy, but I track their overall profitability from their recommendations. So when it's a really good one, or a very successful one, I usually point out their name and I'll give you the stats on that, just so you guys know. Obviously, it's not my suggestion, but if that analyst is really good and you want to do something about it, at least you know. Yep. Cool. I like when you guys talk to each other, man. That's awesome to me. It's just a community of people interested in the same thing. By the way, that's what I'm building here. If you happen to look back to 2 days, I did sort of a video to show you what I'm working on, hanging the lights, just a lighthearted, fun video. I'm going to keep building, right? There's a lot of things we're working on, but I'm going to keep doing my part to build this thing. I just want a cool spot where people that are into the same thing that I'm into have a place to come and hang out. Hey, in the meantime, I hope you guys have a great rest of your day. If I helped you in some way, maybe you'll hit the subscribe button. Greatly appreciate that. Check us out at jazzwealth.com. That's what we're here doing every day. If you're one of our customers, we'll see you in the class tonight. Remember to chew with your mouth closed, and we'll see you tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.